Good evening. Ira Epstein, and here we are with your Wednesday evening Spider ETF market update. And this update is for Wednesday, the 10th of May, 2023, about 6:15 p.m. Central Time. What a battleground day today. The CPI number came out with something for everybody. It satisfied me, being still a hawk, if you will. And the doves got what they want. The headline number falls under 5%. Big number, not a surprise. The not of surprise to me was the sticky inflation in the core. It didn't budge, 5.5%. And of course, naysayers are diving into it. Why isn't it budging? What's going on? Folks, it's really simple. Even if it falls an eighth, a tenth, whatever, they will give any nudge in it that's it, you're down, and you're already going to 3% in that number. I know it sounds crazy, but that's how it's going to work. And that's because the market psychology is bullish right now. Every break in the market gets very good buying that comes in. Today was no exception. If you looked at the Dow at one point, what were you down? About 300 points. You made that all up by the close, all right? So everything comes roaring back, and this is how the naysayers, and that's what I want to call them, keep buying. Now we're going to get the PPI number tomorrow. Whatever it comes out, I think the CPI number set what's going to happen. And what's going to happen is before we get to the June meeting, you will hear in the press that everybody will say, yes, we had that stickiness, but let's see what happens now with the jobs report. We just went through one. And what happens with CPI, which we get to see before the June meeting. I agree. What are they all saying? They're saying we're going to be data dependent. And what's happened in the swaps market, and that's where traders start betting what's going to happen now by year end, the market is saying there will be a 75 basis point reduction. So the market is going from here and saying that. Well, how do you get to that reduction unless something's very wrong in the market? What do I mean by that? If you're going to reduce rates that much, it means the economy is weakening, and the stock market will probably break on that news. What else would make you go down almost a full basis point? You think the Fed would do that just by saying, okay, we don't want to break the market. Let's race down in a good, strong economy. You can't deny we don't have a good, strong economy. Let's race down and keep it that way. And you think that's what the Fed is going to do. You should buy shares in the bridges they sell over America, all right? I don't know what else to tell you because it's craziness, all right? I am still of the opinion that the Fed will stay 100% data dependent, barring an economic debt ceiling debacle, another banking debacle, whatever. First Republic, did you see what happened there? Nice. They added depositors, so people are coming back to the bank. I think they added quite a bit of deposits. That's a positive sign that people, even though these names come out, these banks are able to survive it, and they have faith in their local bank, and there's nothing wrong with that. Just don't keep more than $250,000 in the bank if you have that kind of money. All right, keep it insured. Beyond that, get out of those type of tier banks. I don't know what else to tell you. You're your own problem if you get caught into something. So that's where I think we're at. We saw Disney come out after the market, and they're not getting the subscribers they want on Disney Channel. I know I'm bombarded with Disney ads on local TV. It seems that every 5th to 10th ad is for me to subscribe to my Disney, which I'm not going to do, but that's what they want me to do. And we are looking at other companies. Airbnb today got smashed. All right. I mean, there is a point where you got to start looking at some of the things. Tesla's in an interesting spot on the charts. We'll get there in a second. So when I look at TLT, what you did is you were filling a gap in some of these markets that broke down. You could get more of a rally to fill that. Charts like to fill gaps. If you don't see that, then you're blind. That happens regularly. This chart likes to gap all over the place. Why is that? Because it's so tightly tied to what happens in the futures markets, and by the time this opens at 8:30 a.m. Central Time. We've been trading 20 some odd hours, the futures markets, because they open at 5 o'clock at night. And now you're waiting for all that. The gap creates if there's been a move in them. And again, the futures are reacting to the reports. Many of the economic reports of the day come out between 6 and 7:30 a.m. Central Time. You don't open these markets until 8:30 Central Time, 9:30 Eastern Time, and it creates gaps. That's one of the reasons that you get those. When I look at the pattern, it's bearish. Lower highs, lower lows. No getting away from that. Now, the question is, are we going to get a kiss? And no, that is not the rock group. Kiss is when the 18-day average of closes skirts another moving average, in this case, 104.70, the 100-day, and doesn't quite get under it. If it gets under it, I have to be in the bear camp. Why? Because then I would have the 18 under the 100 and the 100's under the 200. And if price were under all three, I have a classic bearish setup still. Well, that flies in the face of everything. When we come over here, where's the market potential? The Bollinger Bands. Notice how the market makes a run at them and tries to hold it. Up here, all the euphoria, you got yourself nailed if you were buying over that Bollinger Band. If you didn't come out up here, you got nailed. Learn to work with these bands, especially when you have a market that's got a wide set here, not a narrow set where you're going sideways in the market. You got to learn the pattern here. Very important. If you were to drop down tomorrow to 102.59, I'd be telling traders cover all shorts again. Right now, what would I be telling traders? Well, if you take a look, if the 18-day average, it looks on this chart like the 18 is getting ready to get under that 104.70. I don't know. I'd be looking at that and saying, looks to me like you're about to get new bear news. And then I'd have to say, wait a minute, Nelly. Wait a minute. Pull her in. You're already in oversold territory. Do you attract new selling when you're oversold? So you have to tie together the momentum along with the chart action, and it's all right there. It's easy to do. It is not difficult to do. I teach it in the Enhanced Bollinger Band course. It's 15 chapters, videos. You will learn it in a weekend. And then every morning I instill it in you because you get as part of it our morning subscriber videos to the SPDR ETF and the futures. And you start going, oh, wow, look at that. There it is. It's right in front of me. And you start doing it. So I have a downtrend in a market that's excessive on the downside and oversold. Maybe it makes it to the Bollinger Band. It doesn't have to. And I've got 3 layers of resistance. I've got the 18-day 104.82. I have the 105.21, the 200-day, and we have the 100-day at 104.70. Awful lot of resistance within a half a point there. Schwab is still bearish. No sign yet that this is let off. Even seeing First Republic, okay, that you saw it today. They added deposits, not here. Interesting. Gas. I have been looking and telling you that we were due when you lost the embedded reading. Let me walk you into this. That you would make a run, in my opinion at least, back into the closest of these moving averages, but we were going up before you take out that low. That's what I teach. And the trumpets are blowing. And Ira's walking around like a fighter, a prize fighter. Yes, that was a beautiful trade. And the shorts knew to come out. Tesla, be careful here. You get under 166.56, and I'll label this a failure of the market coming off these lows into the 100 and day average in green, 18-day average, close under 166.56, which would be under the 18, and all of a sudden you have a market that's lost that momentum. Very important day coming up tomorrow. XLF, I am in the bear camp. You have an outside day down until today's high is taken out. I look for the market to try to work its way to the lower Bollinger Band. I think you'll have aggressive selling on the way up. If today's high is taken out, I think the bears run. Market's probably going to go back to the 18-day average of closes. The XLI, it's the same thing. You got as high today as 101.12. Just took out this high. I wish it hadn't. It was just such a perfect setup, but it was still perfect. Have I not been saying the market's going to have a hard time at those two averages? You don't think that's correct? It is. But you're not in a clean trend. You have a higher high and lower low and flat momentum. In stocks, you do see the battleground in the semiconductors is sitting here at the 18-day average. That part is bullish, higher lows, higher highs. The market closed today at 413.73 over the 18-day average of 413.26, and momentum's up. The pros are, in my opinion, buying, not really heavy because you're not running, but they're buying there. They're probably having stops here just under the 407.89 level, looking to see if they can get up to the Bollinger Band. It's one of those trades you don't know which way. What should you have done if you were in the home builders and coming in today? What number did you hit on this chart? 72.05 is the upper Bollinger Band. The high of the day, 72.13, and falls $1 from there. You also have a market that's overbought. I think the pros, if they were long, were taking money off the table there. In the energy, you're too oversold for me to get attracted to the short side of the market. The trend is down, but oversold, it either embeds or it corrects the oversold and comes back up and hurts you. In GLD, I remain in the bull camp. There's no reason not to be as I see it here. Higher lows, higher highs, and yes, as the market comes up, I believe you've got to be taking money against that Bollinger Band. You may have even wanted to take some money off yesterday in front of today's CPI and held your core position in it. I know that's what I told my subscribers to do. I lose too, but I won on that trade because they were buying in here and coming out there. But they're still in. We'll see if we're right or wrong. Right now, 190.22 looks like the market's going to have a resistance point there if we can get to that. And I think silver has suddenly lost its appeal. Yep. Now you have an outside day down. You go down to the lower Bollinger Band at 23.21. You got to 23.16. You held it, but suddenly it's not outpacing the gold. You've gone into your stall. So the gold, probably they're going to unwind the spreads and buy gold, sell silver, it looks like to me for a bit here. The copper market, you're right back down to the 100-day average. There's nothing friendly on this chart. This was a market that's been under the 18. You get these bouts of a bear market rally, and that's what it is. And you're stalling each time at the 18-day average and finding it easy to give everything up. This is not a friendly market. Why would you be so bullish on the U.S. economy if copper can't stay up? Copper's the canary in the gold mine. Be careful with that. In BND, battleground, neutral territory, the 18-day average, not really. Not really. It's bullish. So when you go into the total bond market ETF, you got higher lows, higher highs. I think the pros will buy the 18-day average with stops under this low. It's not a big risk, about 30 cents. Looking to see if they can get up, and it's not a big profit either. It's 73.82. It just happens to be a tight market. I don't know what to tell you in the dollar index. The battle just keeps going sideways at the 18-day average in a narrow Bollinger Band. What do you hear me say when the bands narrow in dramatically? And that's what they've done. These were the wider normal bands. This was a wider normal band from top to bottom. You churn, and the churn wipes your account because you're trying to catch each little play typically, saying this is the one where it's going to move, and it doesn't. This is a market you walk away from when you see that for a bit. And you may have completed the downside in FXE as the market is already getting oversold, and it missed hitting the Bollinger Band. You don't have to hit it. It missed it. It's back and fighting at the 18-day average of closes. So you put it all together, and what do we keep talking about here that's happening? It's not that I want it to happen. It's what's going on. You're getting to these bands, and you just are fizzling out. How do you play them? Do you have them in your arsenal? They're so important. I will teach you over a 2-day period at the max, putting in no time, a couple hours, no time. You'll go through the course, 15 video chapters, each maybe, 10 minutes long, something like that. And they build on each other, and you're finally going to say to yourself, darn it, let me see my charts, what I've got. And all of a sudden, a light's going to go out in your head. I really believe that'll happen. And it's going to stick with you, just like we have sticky inflation. You're going to start seeing those bands. You'll never forget where they're at on a chart, and you're going to go, darn it, I remember what he taught me. How do you learn this? It's so simple, because you're going to invest in yourself, not a lot of money to do it. I mean, very little. Watch this and join. Welcome. I'm Ira Epstein, and I'm here to talk about my enhanced Bollinger Band course. Now, many of you have taken my regular charting course, and if not, you might think you know something about Bollinger Bands. As you know, Bollinger Bands are an algorithm designed to keep the market trading within it 95% of the time. And on a chart, it will offer on the top part resistance, on the bottom support, and the idea is the market will travel within them. We know that sometimes it latches onto that band, goes up or goes down. Well, how do you play with that? Can you pyramid the positions off that type of thinking? Well, I've applied all three of these into 13 different videos that teach you my concept of it. And from that concept, you're able to work with weekly charts and or daily charts. The 13 videos, each about 7 minutes long. The idea here is not to put you in school forever, but to teach. Now, if you haven't tried my complete futures research, I throw that in as well. Whether you've tried this or not, I think it's worth taking a look at. I think you're going to learn something from there. That research, by the way, covers twice daily market updates for you and access to what I call window envelope numbers, which I think are very important when looking at these Bollinger Bands. The next part is a trial to our charting software so you can make your charts look the same way that mine do. It's that simple. Where do you go with it and how do you get all this? It's simple. You go to our website, www.iraepstein.com. If you go to the word education, everything you need is answered there. You can also call my staff. They'll be happy to help you get set up. I'm Ira Epstein, on the road to your education.